Also, let's take a look at Lowe's. Lowe's customers pulling back on their hammers and nails again this quarter. The home improvement retailer saw consumers cutting back their visits and spending less when they go. But our next guest sees the tides turning as the housing market starts to recover. And for more, I'm joined by Abbe Will, who is the Senior Research Associate at the Joint Center for Housing Studies of Harvard University. Great to have you here with us, Abbe, to kick off this conversation. First and foremost, you think about results and the trend of what we're seeing from even companies like Lowe's coming out and talking about the DIY consumer. What does that really spell out on a more broad macro scale from your perspective?
Right. So our current projections indicate that spending on renovations and repairs in the US will soften moderately this year, down 6.6% from our estimated spend of $463 billion in 2023 down to $451 billion in 2024. So I think this certainly lines up with what we've been seeing in the retail sales sector, the hardware store sales. Homeowners have been pinched by high costs, certainly inflation, as high as it's been across the economy. More broadly, it's been even more extreme in building materials, in costs of skilled labor. And I think homeowners are reacting to that this year. We are anticipating that the market may be bottoming out this year, right? That's certainly what our current projections show, that we'll bottom out kind of in the second half of this year and start to actually head towards recovery into early next year.
Certainly. And so that considered, Abbe, when we're thinking about either the remodel projects or the kind of rental markets that even is keeping a lot of people locked in at this point because they're priced out of getting into a good interest rate or getting a home or the supply, and that's an issue. I mean, there's so many different factors. What's having the most outsized effect from your perspective and from your study here?
So we do see that this softening in spending and home improvement and repair spending is partly driven by the ongoing weakness in the housing market, right? Those high mortgage rates preventing folks from buying, from moving. And it is the weakness in existing home sales that is really a big factor in our forecast for softer spending this year. A lot of remodeling does tend to happen around the time of a sale. Folks might do some work in advance of putting their home on the market. But in particular, recent home buyers typically spend considerably more for home improvements. So like on average, a recent home buyer in the first several years after purchase are spending 30% more for home improvements than homeowners who've been in their homes for longer. And so I think certainly that decline in home sales that we've seen over this past year into this year is hurting the market overall.
Does a pullback in some of the DIY projects signal to you perhaps where consumers or where potential home buyers are also saying, you know what, we're just going to start to save up a little bit more instead of putting more into what we currently own right now? If we start to save up, then perhaps we'll be best positioned to capitalize on what's going to be a perhaps heavy bidding period once rates do become more favorable as well.
Yeah, absolutely. And what we do see, during kind of times of a softer market, housing market, remodeling market, is that homeowners do shift their spending, the composition of their spending. So it shifts from being relatively more focused on the discretionary projects, the types of projects that homeowners love to do, the kitchen and bath remodels, the room additions, to really focusing more on what needs to be done, right? The need to do projects, we call them replacement projects, roofing, window, siding, systems and equipment, all of the work that can only be put off for so long before it just really becomes necessary. And those projects, homeowners will continue to spend for them. They really need to, especially considering our very old and aging housing stock, right? So fully half of homeowners today are living in homes that are at least 40 years old. And so, that alone, I think is really helping to drive a lot of the replacement spending that has been happening and that we continue to expect this year too.
Certainly. And so what are the DIY projects that still make sense for people to do in order to get the best return on that investment?
Yeah, and DIY, I think a lot of projects that are done DIY often are more in the discretionary realm. I'm certainly, if a homeowner feels they have the skills to do some of those replacement projects, but not a lot of DIY roofing replacements, for example.
Yeah.
It's just not a popular project there. But the smaller scale projects, the kind of maybe doing a partial kitchen remodel, replacing the countertops, refacing the cabinets, painting, all of that can be done much more, easily as a DIY project, and certainly would provide, enjoyment for homeowners to kind of freshen up their spaces, knowing that, they might not be able to do the bigger full remodel this year or really until, the market changes or they just feel better about making those bigger investments in their home.
Abbe, thanks so much for taking the time here with us today. That's Abbe Will, who is a senior research associate at the Joint Center for Housing Studies of Harvard University. Appreciate it.
Thank you.